Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Friday morning. We do have a couple economic events that are coming up today. So the hot zone heads up is the University of Michigan consumer sentiment and inflation. So this is the preliminary. There's multiple versions of this. So this is where we're looking at the preliminary look at both those things. I mean, obviously, both are going to be important. Usually, in the environment that preceded the Fed rate cuts, the inflation expectations took on a lot more importance. But now that the economic environment is, well, at least the perception is that it's shaky, consumer sentiment, consumer behavior. Think about things along the lines of home sales, retail sales, obviously sentiment numbers like this. These are going to take on a little bit more importance because anytime there is economic uncertainty, the fact that the consumer remains resilient and employed is a big deal. Not to mention that the Federal Reserve has a dual mandate, which is both the inflation target that they have and making sure that they don't wreck the employment picture in the process of pursuing that target. So that's where we sit right now as we kick off. We're middle of March. Half of March is gone. It started off pretty darn well with good clarity in a lot of the defensive places that we were looking in the sector secrets mastery, places like utilities, staples, real estate, and even, yes, healthcare. Healthcare it's a quirky defensive, but it can behave like a defensive. The problem with healthcare, and that's why I hesitatingly put it on in that defensive category, is because it's so heavily weighted in the S&P and the Dow. And if those two indices start dragging lower, even though healthcare is usually a defensive, meaning people want to buy that when there's fear and less appetite to buy stocks, they'll buy the things that are perceived as, well, no matter what the economy is doing, everyone needs, we'll think about staples. Everyone's going to keep going to Walmart. Everyone's going to keep going to Costco. They're going to buy goods from Procter and Gamble. Think of the stocks that are in that Staples ETF XLP. Utilities, got to keep the power on. Doesn't matter what the economy is doing. So utilities tend to stay resilient. Things like Southern, Duke. Then I think AEG is pretty strong, been pretty strong as well. Real estate and then healthcare. Two of the better trades that we had earlier this month were things like Johnson & Johnson and XLV. And we pursue looking at symbols that are not as tethered to the fate of the S&P, the NASDAQ, the Dow, but rather have structure of their own for reasons of their own and simply are not going to be affected only by the rising and the falling tide or affected by the Mag 7, for example. So that's where we sit. And as always, if you have any questions, I'm looking at both the rooms. Good morning to the YouTubes, both the Simpler Trading YouTube and my YouTube at Raghee Horner, and the folks in the Simpler Essentials room. All right, if you have any questions, let me know. If you have a position in it, let me know if the time frame is something other than the daily that I have up on this screen. Let me know if you're bullish or bearish, right? So what time frame are you looking at, as well as what symbol? And that's really important, gang. Remember, the time frame is as individual as what symbol you're looking at, right? So look at Johnson & Johnson on a daily, for example, and to look at it on a 5-minute time frame would be two very different slices of psychology. I could be bearish intraday, right, on the S&P or the NASDAQ, what have you, but I could be bullish, say, on the daily or the weekly. So keep that in mind. The time frame you're looking at, the symbol, is as important as individual as the symbol behavior itself. All right, so let's actually, while I'm at it, let's go through some of the indices here and talk about the structure that we've got mid-month. All right, the first thing is I am using TradingView charts. And one of the reasons it's great to use TradingView is, one, it looks beautiful on the phone, right? So if you're not at your computer, if you're not at your laptop, whatever it is, You can see the charts, you can get alerts, you can look at the behavior of the symbols that you're watching. I love it for alerts. Right? I do love it for alerts, and I love that I could plot my indicators on that. So what are the indicators, by the way, that I have on this screen? Along the right edge, you'll see the visible range volume profile. You want to follow the big money. You want to follow what institutions and whatnot are doing. That's what you got to do. Take a peek at what's going on that volume, right? Volume is size. So when we say big money, what are we talking about? We're talking about size. We're talking about institutions, hedge funds, banks. The thing that's underlying all of that is this notion that if we follow the size, it's going to give us some insight into what's happening. So there is only one way to follow size. It's not price, right? It's not a moving average. It is looking at what price the most number of shares, contracts, whatever it is, are being bought and sold, right? So track that. That's what's running along the right edge. All right, then we've got some more, different indicators. One is the multi-structure at the bottom of the chart. This is my traffic light simple way of understanding if there's bullish, bearish, or neutral sentiment, and whether or not there is a trend or not a trend. We want trends, preferably up. Down will do. And by the way, we have, as of this morning, a confirmed downtrend. Let me grab my drawing tools here, and I'll show you exactly what I'm looking at. So anytime you look at my charts, either in Charts and Coffee or in any of the free and premium videos, here you have exactly the idea. All right, this top row is momentum. Momentum is more like what people are thinking and feeling for a very short period of time, right? Momentum can surge, it can wane, it can flatten out, but it's much more temporary. Now, if the momentum persists, notice we started getting bearish momentum way back here. This would be on the date here was February 28th. The momentum started to shift, and you could see that because it went to this magenta color away from the gray, which is neutral. All right, so it persisted for 1, 2, 3, 4, 5, 6, 7, 8. On the 9th day of persistent bearish momentum, we started getting an indication of, look at the lower row, the trend. So now, in real time, specific to the session, specific to the candle, I can see that there is a downtrend that's forming. Now, I don't jump to conclusions. I actually want to slow things down. In a world of everyone doing everything faster, gang, there's no harm in slowing things down. So I want 1 day of that bearish trend, and I want 2 days of that bearish trend. That means on the 3rd day, I can say, you know what? This bearish trend initially has some meaningful traction. So today is the first day after those 2 days that the bearish trend is taking over a little bit. Now, please know, bearish trends can be, and often are, far more volatile than bullish ones. So while this is a bearish trend, here's what you might think about. What within the NASDAQ has been doing this for longer, right? What's a better example of a more established bearish trend? Well, now that you know what you're looking for, take a look at the bottom of my chart. Real time, candle by candle. I'm not waiting for moving averages to cross. I'm not waiting for a certain percentage move. I'm looking at the sentiment persisting, that top row. And then when that persisted long enough, you can see here the 5th of March, followed by the 6th of March. And now then on the 7th of March, that's the beginning of the 3rd session, we have a downtrend. This is a far more established downtrend. This is the downtrend in Amazon. Here's another great one. If you're looking at downtrends, Amazon is also part of the consumer discretionary ETF called XLY. Tesla is the number 2 weighted stock within it. Take a look at how much longer that's been in a downtrend, right? So remember we wanted that 3rd day. So there you go. On February 7th, we couldn't hold it, bounced up a little bit, started the count all over again. So Tuesday the 11th, Wednesday the 12th, and then Thursday the 13th, stuck with that purple magenta color, and boom, we've been heading lower ever since. And this is a far more established downtrend. And this is what we want to look at. I don't want to find things that I'm going to presume are topping out after they're so strong. A lot of times traders who want to be in long puts or short any kind of stock or futures contract or ETF, they're thinking that something strong has hit a ceiling. So rather than presuming that the bus is going to stop right in front of you, look for things that are already exhibiting the behavior that you want to take advantage of. And Tesla is another great example. So we can continue to look at a lot of symbols that are in downtrend. Now, you might ask me, Rog, is Apple in a downtrend? Apple is weak. Is it in a downtrend? No. Right? Would I want to buy calls in Apple? 100% no. So, Rog, okay, before something turns into a downtrend, right, what are you looking for? All right, I'm going to point out a few other things. And then once you understand what you're looking at, it becomes a whole lot easier. This level right here is something called the top tier dots. Yes, I will sometimes call it the equator because it separates the bullish hemisphere from the bearish, but the indicator is actually called the top tier dots. As long as price action is above it, even if it's weak, there's a little bit more bullish sentiment, bullish opinion in that name. For me, I'm really strict. The moment we start printing red candles, and you can see that all over this chart, the moment I start printing red, I can say, you know what, Apple, yeah, you're above the top tier dots. Yeah, you're in that bullish hemisphere, but you're exhibiting a lot of bearish behavior. And this is not my first rodeo. When I see those red candles, I know, yeah, we might struggle a bit for the bears, the sellers to really gain control, but it's fairly inevitable. The best place to start being bearish, meaning sell into resistance, sell the rip as it's known, is wait for price to tumble down through as it did on the opening of Tuesday, March 11, below those white dots, below those top tier dots. And then this is where Apple may not have a downtrend, but it is far more ripe for long puts. Okay, Rod, well, put it together for me. Take a peek. All over the place, kind of still above these white top tier dots. And then we tumble through that level. After that, what I'm looking for is the red candle in the gold zone. That's 3 days in a row now. Red candle, gold zone below that white set of dots, those top tier dots. There you go. That's the process. So, at first it might seem wrong. There's a lot going on the screen. There is, but everything has its job. When we're driving our car, we know the RPMs are telling us something about the motor. We know the fuel gauge is telling us something about how much gas is in the tank. There's all sorts of things just on that little dashboard of our car. I'm not staring at the RPMs all the time. I'm not staring at the fuel gauge all the time. I look at what I need to understand what's most important to me right now. So in terms of, bear with me here. If you are, let's do this. I talked about 5-minute slices of psychology. The psychology of the time frame is as important as the psychology of the symbol itself. Let's say we're looking longer term, right? Let's take it out to, for example, a weekly, right? So one of the questions folks might ask is, from a longer term perspective, why isn't just the bearish sentiment better for being short, right? Especially if you're holding for the long term. Let me show you another example. This is XLC. This is also in the NASDAQ. So let me show you here a 5-minute chart. Choppy, meandering lower. Let me show you a daily chart. Okay, it's kind of bearish, kind of heavy, right? Is it above the white dots? Yes. So, there are other places where it might be better to be bearish, but let's take a look at the weekly. If you're a longer term trader, so now we're talking not today, like a day trade, not the next 2 to 10 days, right? Like a swing trade, but rather say 6 months, years, maybe decades, right? What would I do with something like XLC? Let's use those same tools. What's the trend on the weekly time frame of the communications sector? It's up, right? And here's another cool thing to look at. We're pulling back into a level that numerous times before, if we're in that area, we tend to do what? We tend to bounce. So this is where, if I have a really long-term perspective, I'm going to change the time frame to something more appropriate to a longer time horizon of months, if not years, and I'll look at the structure individual to that. And that's what XLC looks like. Let me get rid of this noise down here. There we go. That's what XLC looks like right now. it's pulling back to a level of far longer term potential support. So again, the time frame is going to dictate the time horizon. And remember, again, just because something is weak, right? Just because something is weak doesn't make it on sale, because on sale also presumes that the thing we want has value. So let's take another example. Let's take the example. Here's a good one. If I go back in time a bit, Boeing, right? I'm going to look at the daily time frame of Boeing. Boeing's been all over the place, but look for how long. This is actually back in 2023. Look at the behavior above the white top tier dots. Look at the behavior below the white top tier dots, right? So we'll have times where we're struggling above and below, right? That's a really good reminder that, hey, maybe there isn't enough structure to dedicate to a longer term position. Remember, patience is okay. If I were looking at Boeing right now and someone were to ask me, Rob, is Boeing weak? Take a look. Where's price in relation to the dots? What are the color of the candles? What's the structure at the bottom of the chart? Boeing has gone into, today will be, actually, yesterday was the third session of the downtrend. So on a daily time frame, give it maybe 2 to 10 days, or to expiration, maybe about 3 weeks. That's going to be, for that length of time, where I will keep a bearish type setup focus. Now, what about on the weekly? Oh gosh, Rog, this has been below this since early March. Yeah, gang, a year ago, Boeing tumbled through and it's remained below. So this is where I think for a lot of traders, we want to think about the symbol, but in 2 or 3 different ways. Yes, we might day trade it. That's one set of, in terms of momentum and trend, that's one set of ideas I might have. I'll look at the daily. All right, well, now I'm talking about days, if not weeks, right? That's another set of setups that I might have, another group of ideas that I might have. And then I go to the weekly. Notice I'm not looking for the 5-minute to agree with the daily, to agree with the weekly, right? They're all 3 different independent things. And if you can look at what's happening right now as 3 independent type approaches, it won't feel as daunting. We won't feel as lost, because each time frame has a job. All right. So that's what's going on with the bigger picture. And by the way, it doesn't mean that I'm going to stop swing trading. Not in any way. But as I showed you with Apple, as I showed you with Tesla, as I showed you now with the NASDAQ, these are increasingly heavier and heavier times. I want to be cautious in an environment where we're still expecting the Federal Reserve to cut rates. That is something that, even though things are really, really weak at the moment, again, take a look at where we are in relation to the dots here on the S&P. Take a look at the color of the candles. Take a look at the structure down in here, right? So if I look at the S&P right now for a time frame of, say, days to weeks, right? Days to weeks, that's going to be focused on the bearish side. But if I take a look at the S&P from the perspective of months to years, I'm going to switch on up to that weekly time frame. Is it time to be a buyer here? Maybe not. It depends on, again, what your comfort level is with deploying certain amounts of cash. This is where I'll say, grab the all-time high. And it's really easy to do on, let me show you here on my Thinkorswim charts. Okay. So I'm going to show you a daily time frame that has just some numbers on it, and I'm going to apply that to the weekly. So I just have this indicator running on my daily time frame. Here's the S&P. What is a 10% pullback? 54, call it 54.50. So right here, I've got this nice little label. 54.50 is a 10% pullback on the S&P futures. 49.33 is oftentimes considered a crash, right? That's at 49.33. That's a 20% pullback. Not until we get back down to, and we're not there yet, right, on the crash level, but 55.50. Is that a level from which I can start thinking about just really almost a mechanical way of saying, I've got months, if not frankly years. I'm comfortable with a buy when the S&P reaches 55.50. I'm comfortable with a buy with an outlook time horizon of years to scoop up, say, SPY. That's another very long-term approach. And by the way, do some number crunching on your own. You never just take it at face value when anyone says anything. Go back in time and look at how many times an all-time high pulls back 10 to 20%, and then where price is 12 to 24 months after that. And you're going to find why I keep getting so excited and talking about these longer term setups. All right, gang, my time's up. As always, thank you so much for being here for Charts and Coffee. We have a job. Each time frame has a set of opportunities. Make sure you're looking at the right time frame for what you're looking at. If you're looking at longer term, don't worry about what a 5 minute, 1 hour, or even daily time frame is doing. Look at the weekly. If you want to be a little bit more in the now, maybe today, yeah, it's going to be the shorter end of the time frames that you're looking at. All right, gang, be good to each other. I'll see you next time.